When we learned how to record a prepaid expense, the most important step was the one where we did the actual balance day adjustment, and that involved doing something called debiting the expense. So we're just going to look at that on its own now, because it's very, very important, because basically the whole process of recording prepaid expenses involves the debiting of the expense. Let's use an example. It's the same example we've been using through all the videos. On the 1st of January, the business prepaid $12,000 for its rent for the next 12 months. So we've got a timeline here. On the 1st of Jan, we're paying $12,000, and that will actually give us an asset there. And if it's $12,000 for 12 months, it'll be a $1,000 asset for each month. And we're going to call that an asset because it is a big pool of unused economic benefits, and we put them all in a big tank or a big pot here. So even though the word prepaid expense has the word expense in it, it is actually an asset, and it's a big pool of unused economic benefits just sitting there. And essentially what we did is, this is called the asset approach. We made a ledger here called prepaid rent expense, which is an asset, and we put a bunch of debits in there. Now we probably would have done just one big debit for $12,000, but just to show each of these months one at a time, I'll put them all in separately. We wouldn't do that really, but just for the sake of this example, I'm just going to put them all in separately there. And then what's going to happen is over time with a prepaid expense, we're going to incur some of it or use it, consume it, whatever word you want to use. So let's say we use up January's rent. We incur it or use it. It now becomes an expense. And the whole process of prepaid expenses is we need to move some of these unused economic benefits into another pot or another tub called the expense. And that is basically going to be a pot or a tub for the used economic benefits. So we need to transfer, in this case, $1,000 for the rent for January from the asset tub over to the expense tub. And to do that, we're going to make another ledger, and it's going to be called rent expense, and it is an expense, obviously. So now we can see we've got two ledgers here. I've got prepaid rent expense, which is an asset, and now I've got the actual rent expense, which is an expense. And basically these two ledgers represent the tub. So this one here, rent expense, represents this used tub of economic benefits, and this prepaid expense account represents the unused economic benefits. So what just happened was a month went by in January, so we used $1,000 of rent, so we better put in $1,000 there. How did we do that? We just debited the expense. That's the key phrase here. On balance day, in this case at the end of January, we debited the expense $1,000 and the economic benefits went in there. How do we do that? Well, every debit needs a credit. So what we've got here is the unused economic benefits that's the asset, that's $12,000. Well, we just used $1,000, so I better take that out. How do I do that? Well, I actually do a credit here in the prepaid rent expense account. So what I did was I debited the expense, the rent expense, and I credited the asset account here. Then another month goes by. So in February, we use another $1,000 of rent. Well, the process is always the same. What do we do on balance day? We debit the expense. And now the expense has gone up to $2,000 because we've used 2 months. But at the same time, every debit needs a credit. So we've got to take it out of this current asset. How do we do that? We do it with a credit. And all that's going to happen each month, so now March has gone by, debit the expense there. That brings the water level up. But then we need to do a credit out of the asset account to bring the water level down in that one. So we do that. Another month goes by. Debit the expense, credit the asset, and so on and so forth. So each month that goes by, debit the expense, credit the asset. Another month goes by, debit the expense, credit the asset, and so on. And eventually what will happen is over time, as we use up all of the prepaid expense, all of those economic benefits that were unused will get used, and we'll get to the final month here in December, and we'll have used $1,000 of the last month here in December. Debit the expense. So now we've actually used all the economic benefits, and we'll have all these unused economic benefits are gone. So this tank is empty. And the key process there was every single period we debited the expense. How do we do that? Well, that is what we're actually calling a balance day adjustment. So on balance day, all you're doing is an adjustment to debit the expense. So here's our BDA, balance day adjustment. In our general journal, what did that look like each month? Well, here's what we did. So let's take January. We moved some of these economic benefits that were unused over here to the used column. We did a debit there to rent expense, and that went there. Debit the expense, and then we did a credit to the asset account here, and that took it out there. And all we do every month is repeat the process. So the key phrase there is debiting the expense. So on balance day, that is essentially all you're going to do with your prepaid expenses is debit the expense.